Guys, if you think that on Wednesday the stock market gave up and there was a very heavy fall more than 1% because of the credit rating downgrade, then no, this was not the case. This kind of fall and this kind of bearish movement that you are seeing here, it was already due in the stock market. However, for some unknown reasons, the entire US stock market, it was just moving up, up and up. And on this particular day, Tuesday, the Dow Jones, it almost hit the absolute saturation point that we have not seen in last many years, which is why a fall, a reversal, a bearish movement or a correction, it was already due on Wednesday. So even if there would not have been this the news, the credit rating downgrade, in that case also the fall was destined, the fall was already planned, it was there. And it was not just the Dow Jones, but also it was the S&P 500 itself. So in my previous S&P 500 technical analysis, I mentioned that because of the formation of this very heavy bearish engulfing candle, this candle has engulfed previous 3 candles. Because of that, there were very heavy bearish sentiments, and then on Friday this a small bullish candle formed. Even though it looks green, but in actual there were the bearish sentiments, green candle but with bearish sentiments, right? And other than that, Dow Jones, we know, as I'm telling you for last many days, that the Dow Jones is going to hit these absolute levels, and then either on Monday or on Tuesday the Dow Jones is going to hit the absolute saturation, absolute critical levels. So this fall, it came on Wednesday, that was August 2nd, right? And in my final update to my community members, I have already mentioned this thing, that now the Dow Jones is still at the stage wherein if it gives up, then it won't be any kind of surprise at all, because Dow Jones now any day, anytime can give up. So will be the entire US stock market. And the Dow Jones is very heavy in terms of everything. And now what you have seen that here on August 2nd, okay, then there came the news that the rating of the US, okay, it was downgraded from AAA to AA plus, AA plus. And this is something that has happened after 12 or 13 years. Last time this thing happened during the Obama administration, and that was just after this the Great Recession. Okay, so we have seen that thing. And since then, this was the very first time we have seen that an agency has downgraded the credit rating of the US, means the entire the system. So the credit rating was downgraded, okay, and already it was at the saturation. This plus credit rating, this, so these two factors, they brought down the entire US stock market more than 1%. So in order to see a bearish movement, this condition, this is the 4537 4527, the condition of 4527 is a must, means the S&P 500 must close below 4527, and not just one, but we need 2 consecutive closings, 2 successive closings below 4527, and then it will be confirmed that now it is not going any more bullish, it is done, and now it is coming down. So this was very clearly mentioned in my previous S&P 500 technical analysis, and you can forward it to like 59:20 seconds, and you will find these the exact same words. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And also, if you are looking for these the daily updates, the daily analysis of S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 technical analysis, that is for the week of August 7th, which is from August 7th 2023 to August 11th 2023. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. Okay, so weekly chart means the big picture, what is going to happen, okay, like for a month, for a quarter or so. That is the weekly chart. Weekly chart means the hawk eye view. Okay, then comes the second point of the agenda, and the second point is the S&P 500 support and resistance levels. So as I mentioned, like 4527, okay, 4527, as long as it is holding above 4527, it will remain bullish no matter what. Once it comes down and it keeps on closing below 4527 two consecutive closings, okay, then it will go bearish or into the correction. Okay, the correction, whether it will be a heavy correction, okay, or a normal correction, or this thing, so it will be confirmed only when the stock market comes into the session, and also the levels, etc., and other technical indicators, right? And in the bull side, this thing, okay, and all. So similarly, I will give you the support and resistance levels and the probable, okay, this the range or the zone for the next week. Then comes the third point of the agenda, and the third point of the agenda is the S&P 500 technical analysis on the daily chart. So this was the weekly chart, right? So weekly chart means the big picture, but the daily chart means that we will analyze through the technical indicators that what is happening in the S&P 500, okay, in this the short time period, like for a week, for 2 weeks, okay, or for a month maximum. That's it, okay. So if you remember that last week, okay, in my S&P 500 technical analysis, I mentioned and I've discussed this candle in very detail, that because this candle has engulfed these the previous three candles, this means that there were very heavy bearish sentiments, and then that was further confirmed when on Friday this a small bullish candle has formed. This candle even failed to hit the open of this the engulfing candle. So it was clear that even though it looks bullish, even though it looks green, but at the same time it is bearish. It is filled with the bearish sentiments, not with the bullish but bearish sentiments, okay. Green but with bearish sentiments, okay. Similarly, so I will do the technical analysis on the daily chart, and I will tell you that what what are these changes that we have seen, okay. And recently there are changes we are seeing after 3 months. After 3 months, finally, okay, there is a change from bullish to bearish, okay. So I will tell you the intensity of the change and what we are expecting in this the correction, okay, for how long and to what levels, okay, this the correction will be there, etc., etc. Now comes the fourth and the last point of the agenda, and the last point of the agenda is the S&P 500 probable movement from August 7th 2023, which is Monday, to August 11th 2023, that will be Friday. So what is going to happen in the S&P 500 from Monday through Friday? So that I will discuss here, okay. So similarly, okay, like last week when I analyzed the S&P 500 and the Dow Jones, okay, so it was clear that Dow Jones is going to create the problem for the S&P 500, and most likely, okay, Tuesday, or if not on Tuesday, then Wednesday, okay, either of these 2 days, okay, on the entire stock market, okay, it will start to give, okay, these are red candles and then the correction and all. So it was there. Similarly, I will discuss, okay, these things for this the coming week. So although it looks red, but yes, the technicals, okay, are at the junction where we can expect, okay, a green candle. Okay, so I will tell you that when we are expecting a green candle, okay, or under what circumstances or conditions this the green candle will be seen, okay. So as I would like to add a disclaimer to this S&P 500 technical analysis, that because I do not know how you are trading, what you are trading into, and how much you have the knowledge of this the stock market, okay, this whether you are a beginner, okay, or an expert, etc. That is why whatever profits and losses you are going to see, these profit and losses are all yours. Now guys, I am going to start with the first point of the agenda, and the first point of the agenda is the S&P 500 technical analysis on the weekly chart. So weekly chart means that the one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay, let me write it down. W as in, okay, weekly chart. Now let's first analyze the candle. Okay. So yes, in terms of the candle, okay, let me tell you one more thing, that I have made a video on this the candlestick patterns, okay, and I've discussed these the two candlestick types, and these candlesticks will give you this kind of 100% accuracy. So this video, okay, candlestick patterns with 100% accuracy, okay, it is available for free, and I've discussed the dark green candle and hollow red candle, okay. These two are the very significant candles, and even if you do not know anything about the stock market, okay, you are just a beginner, then also whenever you see, okay, only these two candles, then also you can trade safely, okay, because the accuracy of these candles are like 100%. So I've given the link to that video, the candlestick accuracy video, in the comment section. Okay, so you can take a look. Anyways, now on the weekly chart, this is a very heavy bearish candle where the closing of the candle is just above the low of the candle. This indicates that last week there were very heavy bearish sentiments, very heavy bearish sentiments. Okay, these heavy bearish sentiments are expected to continue, okay, to the next week. However, there is one more thing. Okay, so we need to check that on this daily chart. But there is one more thing, that because of this kind of closing, secondly, the closing is also below 4527. Okay, and this kind of closing. So this means that on Monday, okay, there is very good probability, not very heavy, but there is very good probability that on Monday we can see either a gap down open, okay, or a flat open, or irrespective of any open, at first, okay, a bearish movement. I'm not saying very heavy bearish movement, even a little bearish movement, okay, that bearish movement will simply, fulfill the technical obligation. Okay, so because of the technical obligation, we are expecting a gap down open on Monday, or irrespective of any open, first, okay, this is the bearish movement, and then the market or the stock market can go, okay, wherever it want to go, whether bullish, bearish, okay, that's subjective and that is different, that we will discuss later. But as of now, I hope this thing is clear, right? So the candle, now let's talk about the technical indicators. Technical indicators still bullish. Okay, so the Ichimoku cloud, the moving averages, the Bollinger Bands. Okay, all of the technical indicators are still bullish. Then what's the change? Change, MACD is bullish. Stochastic RSI. Stochastic RSI is bearish. That's the change, right? Now because the stochastic RSI is bearish, this means that now, so until last week, okay, the S&P 500, it was trading 100% absolute bullish, but now because of the stochastic RSI, it is just 80% bullish, only 80% bullish. However, Dow Jones on the weekly chart is 100% bullish, right? S&P 500 on the weekly chart is 80% bullish. Dow Jones on the weekly chart is 100% bullish, right? So just remember this part, because we are going to use this part in the third point of the agenda and also in the fourth point of the agenda. Okay. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And also don't forget to watch the video candlestick patterns with 100% accuracy. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 technical analysis. And the second point of the agenda is the support and resistance levels for the S&P 500 for this the coming week. Okay. Now in terms of the support and resistance levels, okay, so I'm keeping it to 4609. 4609. Why 4609 even though it is trading below 4527? The reason is that on Thursday is August 10th. On Thursday, CPI data will be published. CPI means the inflation data. Okay. Now, until Thursday, okay, means you can say that there is nothing. Okay, there is a vacuum until Thursday. Thursday morning, CPI data will be published, and this is the only factor that can change the direction. Okay. So let's say if by Thursday or if by Wednesday, okay, evening, if the stock market, okay, is giving a kind of reversal and it is holding and so on, and if the CPI data goes, or if the CPI data comes against the stock market, in that case it will tank heavily, right? Or by the Wednesday evening, if the S&P 500 or the entire US stock market, if it is trading like bearish, okay, or at the same levels, and the CPI data comes as per the expectations of the Wall Street, in that case it will give a very heavy reversal, right? So that is why until Thursday, so there is a vacuum. Okay, Thursday onwards, CPI data will decide or will define the fate of the stock market. Okay, that is why, okay, I'm still keeping the 4609. Although if I calculate, okay, from here the 4609, then it comes like 2 point or approximately 3%, right? Anyway, so this the resistance is 4573 as usual, 4573. Okay. Then comes the zone, the standard zone, and this zone is from 4537 to 4527. This is the zone. Okay, very heavy zone. And now because the S&P 500 is trading below the zone, this means that any reversal will be limited to the zone itself, and then we will see this thing. Okay, so this is there. Then we have 4497. 4497. Okay, yesterday it was providing support, and because Thursday S&P 500 it has closed above 4497, so this was the very first indication that the S&P 500 and the stock market wants to hold. Okay, because of which, okay, other than that, the formation of this candle, okay, this the hollow red candle, okay, that I've discussed in this the candlestick secrets. Okay, we have seen, okay, there's the gap up open, and then upon open, okay, it moved up. So that was because of the Google, and yeah, primarily from the Google, Microsoft, and the Goldman. Okay, so Google and Microsoft in S&P 500, Microsoft and Goldman in Dow Jones. Okay, they were responsible for this the heavy bullish movement, 0.88% up to. Okay, that was there at one point of time. Okay, anyway, so now so it actually it tried to move up, it struggled, it failed, and then it came down. 4497, okay, is it was a good support, but now it is going to act as, you know, heavy resistance. S&P 500 actually it tried to hold, but it failed, so it is going to act as heavy resistance. Then comes 4477. We have seen that it came down, okay, hit 4475, and then it was able to close at 4478. Okay, so 447 is 4477. 4477, okay, it is very good resistance. Then we have 4444. Okay, so 4 times 4, that is the another, this the support, okay, support level. Then we have 4425. Yes, this is the 4425 is the point. 4425 is the point from where we can expect, you know, that a reversal. If the S&P 500 keeps on coming down, and when it reaches to 4425, that is the point when we can expect a reversal. Okay, but if it moves up at first, okay, and later it comes down, in that case 4425 will be able to provide some support, like for 4 hours, for one day it will be able to provide, you know, support to the S&P 500. But then after that, after 1 or 2 days, then the S&P 500 will have to come down. Okay, then after 4425 we have 4396. Again the same with the 4396, very heavy support, very heavy support. Then we have 4371. Okay, so earlier what used to happen is that a movement above 4371 is bullish, below 4371 is bearish. Okay, but then after a lot of struggle, okay, after spending a many days, then okay, this thing, okay, the S&P 500 it was able to breach this the 4371. Okay, anyways, then comes 4343, again the support, and then 4312. 4312 was the 61.8% of the Fibonacci retracement level. Okay, that is why it is important. And now comes this part. This is 4291. 4291, it used to be our golden resistance level, but now it is going to act as the golden support level. 4291 is very much similar to 4573. Sorry, 4527. 4527. Okay, so the same intensity, same importance, same 4527 and 4291, the same. Okay, as of now the S&P 500 has failed, it has closed below 4527, means now, you know, it is bearish, there are heavy bearish sentiments. Okay, but whenever it comes down, and if it comes down heavily, if there, you know, comes a very heavy selling, in that case 4291 will be able to handle the fall. Okay, and even if the S&P 500 breaches the 4291, then also 4265 will come into the picture, and from 4265 to 4291 there is a very heavy, extremely heavy cushion, extremely heavy support. S&P 500 will not be able to breach, and then it will give a reversal. And if you are not yet my Patreon community member, and you are looking for these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, then you can join my Patreon community. And let me tell you that how you can join my Patreon community. Now, in order to join my Patreon community, I have given the link in the description of the video and also in the comment section. When you follow that link, then you will see that this is my Patreon page. And on my Patreon page, okay, I have these tiers. So the first and the second tiers are same. This is these are the daily S&P 500 updates, and this one is for non-US Canada residents, and this is for US and Canada residents. Okay, so when you subscribe or when you opt for these any of these the tiers, then you will get the daily S&P 500 updates, daily analysis of the S&P 500 from Monday through Friday, right? And the third one, it will be discontinued very soon. Okay, this is the stock market opportunities, because now the stock market opportunities are the part of the daily S&P 500 updates. Stock market opportunities means that I give the opportunities in the premium stocks of the US stock market, the top 20 companies, top 30. So these are the premium stocks. And guys, if you notice that many people have joined my Patreon community, and they are getting these the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities, minimum 5 to 10 every week. So guys, if you also want to join my Patreon community in order to get the daily analysis, the daily updates of the S&P 500 from Monday through Friday, as well as the stock market opportunities, then I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the third point of the agenda of this S&P 500 technical analysis. And the third point of the agenda is the SP500 technical analysis on the daily chart. This is the daily chart. Okay, so as usual, the candle. If you look into the candle, then the body of this candle has completely engulfed the body of the previous candle. Other than that, this is the candle from top to bottom. It has completely engulfed the previous candle, right? So I will not say that this is an absolute engulfing. No, this is not an absolute engulfing, because the high of the previous candle, it was 4520, and the open of this candle was 4514. Okay, so although from top to bottom it has completely engulfed the previous candle, but the high, okay, see, we always look into the body part. Okay, this the body was supposed to engulf the previous candle. Okay, so that was not there, but still, most of these the technical traders, okay, they will consider, or they will see it as an absolute engulfing. But absolute engulfing, okay, is something like this: when one candle, when the body of the candle, okay, it engulfs this, okay, the previous candle from top to bottom. Okay, that is the absolute engulfing. So I will call it as partial engulfing. Okay, but many technical traders, they will see it as an absolute engulfing. Anyways, so the result, what will be the result? The result will be bearishness. Bearishness will be the result, as simple as that. Okay, bearishness in a manner that even if it try to move up, the upward movement will be limited and it will fall. Or if it if it comes into the confusing state, then also it will fall. Okay, so means whatsoever be the case, okay, it will show you, or it will give you this the bearishness, right? So this is the candle. Now when we look into these technical indicators, yes, there is a significant change in the technical indicators on the daily chart. So if you look into, okay, these all of okay, Ichimoku cloud and Bollinger Band, they are bullish. Okay, moving averages are neutral, clearly neutral. And then the MACD divergence is heavy, but still, okay, it is bearish. MACD is bearish. Stochastic RSI is also bearish. Okay, so and yes, now it is not overbought. Okay, the technicals have cooled down and everything. Okay, so what it indicates is that the S&P 500 is you can say that it is not 50-50, but it is 60% bearish. Okay, 60% bearish and 40% bullish, right, on the daily chart. But the best part here is that the stochastic RSI, the K channel of the stochastic RSI is 0. Okay, what does that mean? That if the K channel of the stochastic RSI is 0 on the daily chart, this means that now the S&P 500, and see, exactly same thing is there in the Dow Jones. Exactly same thing. Okay, so what does this mean? Okay, this means that now we are expecting a reversal. Okay, reversal in a manner that a green candle must form. Okay, that kind of reversal. because if there comes another red candle, then again it will be more saturated. See, we have K channel and D channel in the stochastic RSI. K channel is 0, but D channel is not 0. But if there comes 2 or 3 more red candles, in that case D channel will also become 0. But historically we have seen that the Dow Jones and the S&P 500, whenever such a condition is seen, and as soon as K channel hits absolute 0, this means that a reversal, a technical reversal comes into the picture. Okay, this means that on Monday onwards, okay, anytime, okay, we can expect a reversal. If not on Monday, then Tuesday it will be there. If not on Tuesday, then on Wednesday, but it will be there. If it comes on Monday, in that case there will be a normal candle. If it comes on Tuesday, okay, a little heavy bullish candle. Okay, not heavy, but a good bullish candle. If it comes on Wednesday, there will be a very heavy bullish candle, very heavy bullish candle. Okay, so if you are my Patreon community member, okay, so accordingly we will see that when the D channel will become 0 and what is happening on the daily basis, and I will update you through these, the pre-market update, okay, and the final update, first, second, third, fourth update, right? So that is the point of concern. The K channel is 0. Okay, remember, a technical reversal is due. Okay, but I see, once again, I'm not saying that 100% that technical reversal will be seen on Monday. I'm saying that yes, there are chances that it can be seen on Monday. But now from any day, okay, or any moment onwards, like from Monday or Monday onwards, okay, anytime we can see a reversal, okay, or a formation of a green candle. And it might not be a very heavy green candle, but any kind of green candle, okay, even a small green candle, okay, or this kind of green candle will also fulfill the technical obligation. Once it forms the green candle, then it will come out of the saturation, and then it will there will be more room, more bearish room, and in that case it can further come down, as simple as that, right? So that will be there. But again, the exactly when it is going to reverse, okay, this will be known only when the session, when the stock market comes into the session, okay, when the trading comes, and then we will have to look into like what these lower level charts are saying, saturated or not, overstretched or not, okay, and some other factors. So I will update you through the pre-market update or the final update, okay, accordingly when this happens, okay, in my Patreon community. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to join my Patreon community in order to get the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as the stock market opportunities, minimum 5 to 10 every week. So in that case, you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the fourth and the last point of the agenda of this S&P 500 technical analysis. And this, the last point of the agenda, is the probable movement of the SP500 in the coming week, that is from August 7th 2023 to August 11th 2023. Okay, Monday and Friday. So Monday to Friday, Monday, Tuesday, Wednesday, Thursday, Friday. What is going to happen in the S&P 500 index from Monday through Friday? So I'm going to discuss that thing here, right? So before I discuss the technical part, okay, you must understand, okay, a few things. These are very, very important. Number one, until Thursday morning, Thursday is 10th of August. Okay, so Thursday 10th of August, until Thursday morning, there is a vacuum in the stock market. Okay, see, the earnings season is, you can say, like it's over, kind of over, because all of the giants have posted their earnings. Okay, now Apple and Amazon, okay, they were the last, they have also posted the earnings. So means this, the earnings season is over. So the kind of bullish help, okay, this the earnings season was supposed to give to the stock market, okay, that bullish help for now, okay, it is not there. Okay. It might come in some form, okay, like some other companies are going to post the earnings, but these companies are not very significant. Okay, that is why we are not expecting much impact. So earnings season is over. Okay, other than that, data, yes, data, economic data, Monday, Tuesday, Wednesday, okay, I think that no important economic data is scheduled. Okay. This means that Monday, Tuesday and Wednesday, there is a vacuum in the stock market. Vacuum in the sense that the stock market without any external support like earnings, okay, or any expected economic data, it is expected to trade bearish. Okay, the only factor here is the reversal, okay, that I'm going to talk about, right? So Thursday 10th of August, the CPI data will be published. Now the CPI data, if the CPI data comes as per the expectations of the Wall Street, in that case bullish, definitely bullish. Okay, but if somehow inflation gives a reversal, a bullish reversal, in that case, okay, this movement, bearish movement, simple, okay, simple logic, no rocket science, right? So Thursday will give the momentum and the direction to the stock market. Now comes the next part, okay, and the next part is the K channel. K channel is absolute zero, but at the same time remember D is not zero. Okay, a 100% confirmation comes, a 100% confirmation of a reversal comes only when K is 0 and D is 0. But in the current scenario, only K is 0 and D is non-zero. Okay, in order to see that this the D is equal to 0, okay, there must come 2 or 3, minimum 2 or 3 red candles, then only the D channel will become 0. Okay, as of now I cannot comment whether there will be 2 candles or 3 candles. It will be known, okay, only when the stock market comes into the session on Monday and Tuesday, then only, okay, I will be able to confirm. So if you're my Patreon community member, okay, then I will update this, okay, most likely in the pre-market update on Tuesday. Okay, anyway, so K channel, D channel, but as of now K channel is 0. Okay, this is more than enough itself. Okay, this in itself is more than enough. Third point is the credit rating from AAA to AA plus. So AAA is the best credit rating. Okay, now the best part was, so even when the government itself has released a press note, then the Goldman Sachs, JPM, these are big bankers, okay, all of them came to rescue. But we have seen that still there, okay, there was a very heavy bearishness and very heavy bearish movement in the entire stock market. So they failed to save this stock market. So what I'm trying to say is that the impact of the credit rating downgrade will still be there, and the bearish sentiments, okay, that have come, okay, through this will be there. Now the other part that no one is discussing is this: the same credit rating agency, Fitch credit rating agency that has downgraded, okay, it has earlier declared a recession that will be there in Q4 2023 in the US. There will be a recession that will begin in Q4 2023, and that will be there, okay, at least for 1 year. Now this is the month of August, then we have September, October, November, December. October, November, December, that is the Q4. We are 2 months away. Okay, so if the impact is felt heavily, and if at the same time, if there comes just one more agency, just one more credit rating agency, and this agency also downgrades the rating from AAA to AA plus, then definitely, okay, the recession will begin from Q4 itself. Okay, as of now, so earlier I've discussed that, and I mentioned that the recession is there, recession will be there, although it will be a mild recession. Okay, it will be there, it is there. The recession, okay, it has been delayed. The recession, it has been delayed, but it is not cancelled. Remember, recession is delayed but not cancelled. Okay, now because the Fitch rating agency has come into the picture, this means that yes, the recession part is back into the picture. Okay, just one more a mega event, and then Q4. Okay, so earlier we were expecting the recession to be seen like first quarter of 2024 or second quarter of 2024, but now the things are changing. Okay, so now let's discuss the technical part. So I hope these three conditions are clear. Now in terms of the technical part, as I mentioned that the K channel is 0. Okay, this means a reversal, okay, it can come anytime. Now if the reversal comes on Monday, in that case what will happen? It will move up. It will move up to what? 4497. 4497. It will find heavy resistance at 4497. If there comes some other factors into the picture, positive factors, okay, then after struggling around 4497, it will be able to move up to what? Move up to at most to 4527, 4527, and then this is the zone. Okay, otherwise 4527 is sufficient. Otherwise we also have the 4537. This is the zone. On Friday it has failed, okay, in the zone itself. At most up to this, and that's it. If there comes a green candle on what? If there comes a green candle on Monday, okay, and I am not talking about this kind of dark green candle. This is a dark green candle, okay, no, this is not bullish, right? I'm talking about a green candle like this, okay, like this green candle. If this kind of candle is seen, okay, on Monday, in that case the S&P 500 and the Dow Jones and the stock market will come out of the technical obligation of giving the reversal, because it was already given the reversal. Done. Now from Monday or Wednesday onwards, okay, it can just come down, okay, without any problem, without any issues, because now in order to move above or in order to move beyond 4527, the entire stock market needs extremely heavy push. Without this, the extremely heavy push, the upward movement is not possible. Means upward movement beyond 4527 or beyond this zone is not possible. It is done. Okay, and where we are going to get this extremely heavy push, where means where the stock market is going to get extremely heavy push? CPI data. Only if the CPI data comes in favor of the stock market, then there will be extremely heavy push, right? Means that can breach and that can help the S&P 500 to sustain above the zone. Okay, now that was there, okay, 4527, and then okay, this reversal. Now let's say on Monday there comes a red candle, again a red candle. In that case, D channel will move closer to zero, but it will not be zero. Definitely it will not be zero on Monday. Okay, but now in that case what will happen? Now the chances, the probability will further increase, okay, of seeing this heavy, this bullish movement. Okay, it will not heavy bullish movement, but a retrace, okay, a normal retrace, okay, a bullish retrace, that the probability will increase, right? Now if surprisingly, if on Tuesday, if again there comes a red candle, then again I'm not say means I cannot say that the D channel will become zero. It will be known, okay, only on Tuesday when the stock market opens. Okay, so I will update you through this, okay, most likely in the first update, okay, after 1 hour, okay, I will update you, okay, through this the post, if they, okay, if that happens. So if on Tuesday, okay, if there comes this again, see, if there comes a green candle on Tuesday, fine, okay, so technical obligation has been fulfilled, fine, no problem. Okay, so it can come down. If still on Tuesday, if there comes a red candle, in that case what will happen? In that case D will move further closer to zero. Then comes Wednesday. Okay, now Wednesday again the same story. Okay, green candle is good, okay, and red candle is okay, this thing again. But on Wednesday most likely it will hit, the D channel will hit absolute zero. If there comes a red candle on Monday and Tuesday, then definitely on, or not definitely, okay, I will say 99%, because again the calculations, okay, I need to do the calculation. So on 99%, okay, it will become zero. Now the best part is that if by Wednesday, Monday, Tuesday, Wednesday, right, if Monday, Tuesday, Wednesday stock market trades red, and red, then on Thursday there comes this the CPI data, and the CPI data is as per the expectations of the Wall Street, confirming that the inflation has further come down, right? In that case, there might come a gap down open or a gap up open, and then a very heavy bullish reversal, very heavy bullish reversal. But there is one more thing. As of now, lower level charts, okay, they are like means not overstretched, but if this thing continues, okay, in the bearish side, like one red candle, two red candle or so, then the lower level charts will be in the overstretched okay, condition. In that case, what will happen? That there will be a fall, no problem, there will be a fall, but this fall will be limited. This fall will not be heavy. For example, the fall will be up to 4425, up to 4425, and then there will be, okay, a technical reversal. Okay, it will be demanded, okay, through the technicals, a reversal, right? So we need to see, okay, whether the lower level charts are overstressed or not. Okay, so that will be another, means we can see a red candle, but the movement will be normal, movement will be slow. So what can help the bears, not the bulls, not the bulls, bears? Okay, a green candle will help the bears, because a green candle will make room in the bearish side, so that the S&P 500 can come down easily. It can come down to 4,300. Okay, without saturating the technical. All we need is one green candle. Doesn't matter whether it is, you know, heavy or, you know, less heavy or normal, whatever, okay, it is okay, that thing doesn't matter. But if that comes into the picture, okay, just a green candle, then the S&P 500 and the entire stock market is free to come down, okay, without any problem, right? 4425, yes, 4425 is the first point, okay, where we can expect a reversal. Then 4396, and then the 4310 and 4291, okay, that will be there. And for the bulls, okay, what the bulls will be looking for? Bulls will be looking for 4527, 4527, okay. The S&P 500 must breach 4527 and must trade above 4527, no matter what. Okay, after 4527, then we have 4537. Okay, so this means that 4527, 4537, this zone must be cleared, but at first 4527. When this happens and the S&P 500 trades above this zone, then it will re-enter into its bullish trend. Okay, and then that bullish trend will continue, as simple as that. Okay, but for this 4527, 4537 to happen, there must come a very extremely heavy solid reason, something like CPI. Okay, this means that we need to wait until Thursday. Okay, only on Thursday, okay, we will come to know what is happening. Okay, whether it will be bearish or bullish. And one more thing, guys, last week also, okay, I mentioned this thing, that now the MACD is bearish and the stochastic RSI is bearish. Okay, and what do we know about the MACD and the stochastic RSI? Whenever MACD and the stochastic RSI, they follow a particular direction, or they are aligned in a particular direction, in that case, that direction becomes the direction of the index, direction of the stock market. As of now, MACD and the stochastic RSI on the daily chart of the S&P 500 as well as the Dow Jones, okay, these are bearish. This means that there are very heavy bearish sentiments, and any upward movement will be, you know, it will be suppressed. It will face, you know, heavy resistances, and eventually it will give up, just like what we have seen on Friday. So guys, next week, okay, it will be like, it will be volatile from Thursday onwards. Okay, but the most important part is that the D, okay, we need to see that if the D becomes 0 or not, because when the D becomes 0, then definitely 100% there will be a very heavy bullish reversal, very heavy bullish reversal. Okay, so I will confirm, okay, when this happens. Okay, and if you're my Patreon community member, okay, then accordingly, okay, I will confirm this thing, okay, through first most likely through the first update, okay, when this thing happens. And if you are not yet my Patreon community member, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And guys, hit like if you have liked this video, and also if you have any questions that you want to ask, then please feel free to ask through the comment section. So guys, this was my S&P 500 technical analysis for the week of August 7th, 2023. That is from August 7th, 2023, which is Monday, to August 11th, 2023. That will be Friday.